Hey, folks, welcome again to Soaring Profits. As always, Patrick. And
James.
folks, we've got kind of a crazy day that's occurring right now and this week in general. So we have some interesting stuff out of the States with the FOMC as well as the Federal Reserve. And James and I, you got to check out his latest video about the Toronto Marathon that he did there. He did the 5K.
Yeah.
But after James had lost his keys,
That's
we
going to
ended
be a
up
thing for a while.
That's gonna be a thing. I'm gonna use that one for a while. So after James had lost his keys, him, myself, and my daughter, we ended up kind of hitting some of the malls in the GTA, the Greater Toronto area, and we started asking some questions, and we were engaging with some of the shop retail personnel that were the workers, employees, and that sort of thing, and we were getting some interesting feedback. So I do this often. James has known me for a long time, and whether we go out to a restaurant, where we're at a bar, whether that sort of thing, I really take my time and engage with people. And
Well,
I
it's
ask,
kind of like you're taking the pulse of the businesses in our community, because I know eventually you like to open a business yourself. So it seems like you're like trying to get the pulse and the feeling of what people are doing and how consumers are consuming products and stuff like that.
100%. Like, so one of the businesses we went into was a new retail entity that had just opened up in a mall. And like for me, I look at that and I see a new retail outlet going into a mall post COVID in the age of retail shopping. And I go like, what are you thinking? Right? So basically what we have here today for you is we have some information and data after that conversation. And James kind of came up with it. He thought that he's like, you know what, those conversations that you have, Pat, they're very interesting. And I think that our audience would be interested in them. Right.
Mm-hmm.
So
Yeah, you go when you meet a new person in a business, particularly sometimes when we're at a restaurant, you just do a deep dive into what's going on and ask them the questions about, the consumer and their product and why they chose, like in this particular case, why they chose to come all the way from, I believe it was BC into like Ontario, where maybe we're not doing the best in a mall setting.
right. So here's some. So I've given you my opinion about that's a troublesome business area right now. But now I want to back that up with some data. So when we take a look here, guys, and I'll pull this there. So when we get an opportunity to take a look at this here, folks, what this is this is the Simon Property Group ETF. And basically what the Simon Property Group ETF stands for, and this is a traded entity, is a REIT. So it's a real estate investment trust. Okay. So this is a group of, well, this one itself is one company, but these guys own malls. They own retail. They own all kinds of different projects that people are going in, signing leases and doing business. Okay. So when we take a look up here on the charting, this is a 5-year chart, and we can see that, well, this is not good. So what is this? Well, this is going back into March of 2020, right? So everyone can flag that and see that that's COVID. But what we've seen here is a little bit of a run up. We've had some success, right? The problem is that what we're going into now with the inflationary problems that we're having, the online consumerism, right? People over the last couple of years here have realized that I can buy toilet paper, I can buy dog food, I can buy chicken, I can buy meat, I can buy all of this stuff offline. They're coming out of the retail entities, right? So a lot of these holdings, while they've rebounded, they've had troubles getting back to all-time highs. Like this high here that we just had back in November of 21 with all of the government stimulus that we received, right? Like the Americans were pumping money, the Canadians were pumping money, the world was pumping money. We never got back to all-time highs. We didn't even get back to all-time highs of December of 2017, right? So what this is telling me, obviously there's a subsequent decline after this, and we're going to get into that. But what this is telling me is that retail in a lot of senses is struggling. Okay. So when we have these conversations with this entity that had just opened up in a mall, and this is in the area where we are, it's a bedroom community to Toronto. But these malls are usually heavy traffic. One of the things that I talked with you and my daughter at the time when we were going through the malls, I said, are people carrying bags? Right. So one of the deals that when I look and I go shopping and I'm looking at the consumer is, okay, what's the foot traffic? Is there foot traffic? The mall was fairly busy, would you say?
It was very busy. Yeah.
Right. But when I asked you how many people were carrying bags, what was the percentage?
Oh, I would say there was 1 in 20.
Right.
And
So
not
to
a lot of
me,
bags. There would be like
no,
one person carrying one bag.
right.
Yeah.
So when you have your one person carrying your one bag, there you can start inferring some things, right? Well, we can go back to our chart and we can say, well, the consumer's pulling out, right? The consumer's pulling out, and therefore they're not signing leases. They're not continuing their leases. They're not willing to sign longer, more profitable leases for this organization. Okay. So what we're seeing here is, well, LuxAlgo, the algorithm that I use for this program, again, shout out to LuxAlgo, amazing software that they use. And they have a free version of their service as well as they have a pay per service, but it's flagging a sell. It's feeling like this is going to probably run back down here and retest, likely into these July and August of 2020 rates. This becomes incredibly scary because right now we are on the verge of our first month of recessionary GDP. Okay. So a lot of fancy words, a lot of acronyms, a lot of crazy stuff when we talk about this stuff. A recession, everyone's probably heard of a recession. A recession is when we have economic pullback. Okay. So when you have exponential growth, this is exponential decay. This is exponential growth. Okay. If this went like this would be more linear growth. Remember grade 8 math, folks, right? So when we have exponential growth, we usually have some sort of pullback afterwards because we can't maintain exponential growth. The problem is now is that major corporations, major entities are missing on their earnings. So a great example, Amazon. We just talked about this. The consumer has been primed for the last two and a little bit years now that we're talking for online purchasing. Amazon last week with their earnings missed on top line revenue and earnings per share. That's crazy. How is Amazon missing on their earnings? These are where everyone has went to. So if they're missing, what is retail looking forward to? And that's why when we look here, we can see that over this period of time, over this period of time, we are seeing a catastrophic pullback. And I think we will continue to see that. So what we're trying to do here, folks, is we're trying to give you some insights into the market, into the world. And these are conversations that I've had for years. I didn't really see a whole lot of value of them other than just to myself. And it was great. It was funny because James and I were having these conversations and we're like, he's like, dude, this stuff's great. It's great content. It's great information.
Yeah.
Right. So,
well, you see the world in a totally different way. Like there was one point where we were in a store and all these women were going in, they were grabbing a whole bunch of clothes. They were going to the back and they'd try on a bunch and then they'd come back, drop the clothes off, and then they leave. And you're like, that's it right there. All they're doing is, because women's sizes are so various and wide, they're going in, they're finding out that there are 2, there are 6, there are 10, and then they're going online. And so basically they're just going there to model clothing so that they can buy it when they're at home. So they have an idea of what they should be buying so they don't have to go back and forth. The store now is just a place to try things, is the basic concept that you were kind of describing to me at the store. And I'm like, wow, like I'm just sitting in a store. I'm not really thinking about that in that way.
Right. And I think but see, this is an even scary thing because you're absolutely right. And we have those conversations and the charting is proving that. But now when you have a company like Amazon that misses because they were the online storefront, they were the online shop that these people were going out and finding their sizing for. Well, where's that dollar going? Well, this is where, so when you look at Visa, when you look at some of the shopping, PayPal, Square, that is now that was owned by the Twitter founder, it's now pivoted into more of a crypto base. They're trying to market themselves as a crypto based product. But Square Payment, you saw all of these companies pull back on their expectations. So what we're looking at now is that we're going to have consumers in fear of recession are going to stimulate a recession because they go, okay, I thought inflation was going. So if I was going to go buy X thing today, because it's going to be more expensive tomorrow, they're priced themselves out of the market. They're done. They're running out of cash. There's no more mucho dinero. And when we have that problem, the psychological perspective of the consumer changes and we see massive pullback. China, the Chinese consumer for the last 3 months has stopped spending. China is on the brink of a problem that they will not be able to solve. And if China falls, we have the evergreen debt crisis in their housing market. We have a number of those supply chain problems where if China's not manufacturing, then we're not able to consume. If we're not able to consume, then we're not able to continue to grow our GDP. If our GDP falls, we are on a paper recession, which stimulates the psychographic component of the consumer, which, do you see how this all chain links down the road?
Mm-hmm.
So where we are right now is we're at a very pivotal moment. And I think tomorrow, so we're going to get the federal fund rates that are going to be announced tomorrow. We're likely going to see a 0.5% increase in interest rates, potentially as much as 0.75. People are kind of scoffing at that as, but the rates are still only like 1. Even if we got a 0.75, it's still only 1% from the Federal Reserve Bank. It's like, yeah, but the whole world is not expecting it and the economy isn't strong enough. So tomorrow, for you folks at home, if you have an opportunity, if you have stock holdings, if you have mutual funds that you have through work or however you're investing your own portfolios, again, we are not financial advisors and we're certainly not your financial advisor. But what we're saying here, folks, is that there's going to be blood on the streets. There has been blood on the streets. And when that happens, there's opportunities to be made. And whether you decide that, okay, we're looking at a position here to short a position like this, and shorting is when you bet against something. You're borrowing the shares to purchase them at a high price, riding the stock down to a lower price, and then selling the share back and fulfilling that order. So there's companies like this, like REITs, that are going to be able to be shorted as real estate falls. And I think personally, again, investing in real estate here in Canada, I think the US market is prime for a major, major, major pullback. And this is all telling me that the consumer is losing money. They're losing faith in the ability to spend. The Canadian consumer is there too. And we did more than we ever could for COVID. People made more money during COVID in Canada than they had in years prior to COVID. It was crazy.
Yeah, I think part of the problem is the skyrocketing costs, like meat's gone up and gas has gone up. And I was talking to a lady at work today, and she was literally going to the gas station beside our work because she was out of gas to put $15 in so she could drive to a reserve where the gas was like, I don't know if it's 10 or 20 cents cheaper.
Right.
Like, and it's a half-hour drive. So so if you're so short that you have to do that, it's unlikely you're going to go out and buy a brand new wardrobe or new shoes.
Absolutely.
You're gonna suck that money in, because I know next week I'm gonna spend $120 on gas, or I'm gonna have to spend $400 on groceries where I was paying $200 on groceries. All of that boils down into a family of, we're not going to buy any extras. We're not going to go on trips. We're not going to go to the movies. There's a whole bunch of industries that are going to fall back. And you're absolutely right, because now we're just like self-preservation. I got to keep my money until we get past where I can live freely again, and things are cheaper, right?
Well, and this is the crazy part about this. In most families, so what you're talking about there is called discretionary income. Okay. So that's money that after all the bills are paid, everything's chopped down into their little line items that they need to cover. That's the cash. That's the fun money, right? That's the discretionary income that they have. Okay. Well, the problem is that the governments around the world are telling you that, it's the best time we've ever had. The governments are the economies are so strong. That's why we're seeing inflation. It's like, no, the economies are not so strong. We're seeing inflation because we have commodity pricing that is soaring. We have inflation because we printed trillions and trillions and trillions of dollars and handed it to people. That's not giving
and not
people
created anything.
Well, what we did is we gave people a fish instead of teaching them to fish. Right. And, go back and talk, listen to a few of our, conversations on, welfare and some of the stuff that we've talked about before, and you'll know my perspective on that. But what we're going to do is we have overstimulated the economy. Now the Federal Reserve Bank, Canada, we've already done a 0.5% increase. Tomorrow, likely 0.5 from the Fed in the States, potentially a 0.75. If it hits a 0.75 tomorrow, don't look at your holdings. Do not look at your stock market tomorrow if they go to a 0.75, because it won't be good. It will crash the market. And I've got to ask if that's not the plan. There's so much liquidity at the top of the market right now that if they can crash that and pull it down, they will solve inflation. They'll look like heroes and they will have solved the problem. Okay. The problem is that these guys are multi-millionaires. And for them, when they go to the grocery store and they see that chicken's up 7% in a month, they don't care.
No.
It's the people at home that it hits hard. And that's the problem, is that we've given government too much power in our finances and they take full bear on it. So again, where we started with this conversation is that there's risks, there's concerns. This is a very tumultuous time right now in the market. And so we've got to think safely, right? Again, I'm not a financial planner. I'm not your financial planner, but there are going to be opportunities in the near future. Do I think we're at the bottom? No, but I think that there's so much preparation. There's so much blood in the street already that we could actually be getting there. If we have another 5 or 10% pullback, I think it's all in, buy as much as you can on your really assuring names, right? And that's what we're here to do. We're here to try to give
tried and true companies that have been known to make money.
Well, okay. So like if you were to think of like a consumer discretionary. So if there was one product in your house that you cannot live tomorrow without, what would it be?
It's a very good question. I don't know.
Toilet paper.
Toilet paper, sure.
Right. Remember at the start of the pandemic?
We had a big toilet paper crisis there for a bit. So
right. So when the toilet paper crisis happened of 2020, like that'll ever go down in the grandchildren's mindset.
Yeah.
But what did we have? We had a run on these commodities. We had a run on this stuff. So these discretionary companies, if they feel that they still have pricing power, you might pay $30 for a bag of toilet paper. Well, if they think that you need it and they feel that they have pricing, the problem is that pricing power is wearing off. They're hitting the top of it. Right. People are going, no, I'll figure something else out. I'll go to name brand
newspaper.
Right. Yeah. I'm gonna go off name brand. I'm gonna go to the cheap stuff. I'm going to single ply. I'm gonna go to the toilet paper that's in every public building around the country. Right. So when you start seeing those staples and those commodities, because toilet paper is a commodity. Like you can put fluffy cats on it, or you can put teddy bears. You can put whatever you want.
But you gotta have it.
You gotta have it.
Yeah.
Right. So when those companies lose pricing power, which they haven't yet, when they talk about in their shareholder earnings, but they're getting there. Right. As inflation comes up, people are not going to pay $75 for toilet paper. They're just not going to do it.
No.
So that pricing power eventually stops and it starts to yield back. And then that's when you price yourself out of the market. Mm-hmm. There's going to be a fall. And that's that catastrophic yield curve is what you end up getting, where the pricing doesn't fit the commodity justification anymore. And people go, no, then they have to react. But can they react quick enough to catch themselves? And that's where we're at right now, is that our whole economy is in this. And then it's like trying to catch itself here. And the Federal Reserve is trying to land us. The verbiage that they keep using is a soft landing. And it's like they've never gotten it right in the history of finance because they don't need to. When they crash a market, they make money. When the market booms, they make money. It doesn't matter. These are professional traders. And these are some skill sets that I want to go over and teach later as we go through this. But swing trading, how to get into a market, how to get out of a market, how to look at a market, how to read a trend. Like for instance, like let me pull this up here again.
You stopped sharing there.
If I pull this up, are we gonna?
Unfortunately,
let's leave it for another.
Let's leave it for camera 3.
I got you. Okay.
So you have to say your bias to here.
This one here. So let's leave it for there for tonight. But what we want to do is I want to do some swing trading with you folks, show you guys how to break down a chart, how to get some of the insights that, James and I are looking at here on the daily basis and providing this content, some of the insights that allow us to, again, we've said this before, but look at the world in a slightly different view than just reactionary. We had the information last night that broke about Roe v. Wade, and I'm sure we'll have a conversation about that with the abortion issue in the United States. And these are some very real issues in people's lives. But I hate to say it, but you can chart this stuff. Like there's very real parameters about why all the media breaks when the media breaks, because the media is tied to big corporate entities, and when they need stories to come out, stories come out. So there's very real ramifications to why things come out the way that they come out in the world, and it makes you think a little bit differently about.
I think the people out there should walk around, start noticing how people are buying, how they're shopping, just
Right.
like you were saying. Look at the bags in people's hands, see what people are actually doing when they're in stores.
Yeah.
And it's some interesting stuff. You'll see exactly what Pat's talking about. It's very good. I'm not sure about all this news media stuff is. Like, I do think news media is controlled by big government a lot of times, but on both sides.
Right.
And
Oh, 100%.
and
There's every side of
definitely
it.
stories that aren't so important. Like right now, we have the Johnny Depp thing that is on everyone's mind, and I avoid it like the plague because I don't care. But it 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 keeps people occupied.
Right.
It helps them forget that they have no money. It helps them forget that things are not great in their country. So
This is not
that's
new.
why it's all why else would you televise it? It
Right.
makes no sense. Who cares?
This,
Who
yeah,
cares?
this is not new, and this goes back to the gladiatorial events of Rome.
Right.
Right. The Colosseum, as beautiful an architectural structure that it is, it was not built for its architectural beauty. It was
No.
built to entertain the masses so that the government could continue to reign. They understood that a bored public is a violent and dangerous public.
Yeah.
And, these are conversations obviously that we will have, and we will dive into deeper and go from there because we love this stuff. But no, again, folks, thank you very much. I know that we've lost the camera over here, some of these tech beautiful problems that we get, but thank you again. Let's continue to have these conversations. Like I said earlier, is that this is a conversation that you can have with your family. You can start looking around in the malls, look around, have these conversations when you go shopping at your grocery store and talk with the people that are there. Simple thing that I always do is, hi, how are you today? Yeah, good, great. How are you? You've been busy? And everyone, it's start. It's that engagement that gives people that opportunity to give you something back and open that dialogue. And it's super easy. You get an opportunity to engage with another human being for a little while, and especially post-COVID, it's kind of nice. But you get to keep a finger kind of on the pulse of what's happening in your community as well. So again, folks, thank you very much. Patrick and James here, Soaring Profits. And as always, let's see if we can make some money together. Thanks, guys.
Hey, James from Soaring Profits and Pat over here. Aren't those two great looking cartoons?
Now, with that being said, folks, obviously we are not financial advisors, and we're certainly not your financial advisors. We don't know your risk tolerance. We don't know if you got money in the bank. We don't know what your situation is. So when we're having these discussions, we appreciate you tuning in. However, have some discretion. If you make $1 million with us, we're glad to have you. If you lose $1 million, that's on you as well, folks. Let's work together. Let's make some money, and we'll go from there. Thanks, guys.